All right, what you're looking at is the NASDAQ composite daily time frame chart here going all the way to 2018 to today, 2023. About 5 year worth of data here. As you can see, you have my, you can see my midterm moving average is the vivid dotted blue line there. And then a long-term moving average, kind of grayish blue, as you can see. So what we have right now is going all the way to 2018, you see that we've been blessed with these V-shaped reversals. As you can see here, 2018 came down, into 2019, we see a very abrupt sell-off. We V-shaped higher, some zigzagging along the way. We made a nice swift move and we're met with COVID. Remember that? And we see very, very fast tankage. Market V-shapes higher yet again and makes huge move from 2020 lows to 2021 peak. However, starting 2022, January, market started to tumble here, as you can see, and we saw that the dead cross signal right here. So as you can see that, the long-term moving average is right here, and then the mid-term moving average, they're crossing down, right? That's the dead cross. And then instead of seeing the V-shaped reversal that we're so used to from the last several years or so, as you can see, we look like it's gonna happen, but the long-term moving average was right there to kind of, act as resistance. So market falls right back down and we've witnessed lower lows. As you can see, market comes right back up. However, in that vicinity at the time, my long-term moving average is declining. Benefit of the doubt goes to sellers. We see another decline there, and we see yet again another lower lows. So lower lows, lower highs, definitely a downtrend. And then what happened was, as you can see right here, for the first time since this entire decline, starting 2022, we have what is known as a golden cross here. You can see that my midterm moving average and my long-term moving average, they are crossing to the upside. So when you see this signal appearing, especially in a steep correctional phase, and when you see the midterm and long-term crossing to the upside, along with higher lows and higher highs development on the price action to substantiate that golden cross, you can then forecast this market that we have a good probability that this market is preparing to establish its own uptrend. And you could all even say that in a secular bull market, trend is ready to resume, because in a secular term, I am looking at these as just a mere corrections along the way in a secular bull market trend. I'm gonna look at this chart here going all the way to 1982 and 3. So you can see in 1982 and 1983, look at here, 1979 or so, we see very abrupt sell-off similar to 2019, right? 2018, 2019, however, V-shaped higher, market gets right back up here, a little up and down, make a move, thrust above it, make new all-time highs, and then we see very abrupt decline in 1980. It looks similar to COVID decline during 2020. And then, as you can see, it just like 2020, 2021 move, this market goes pretty much parabolic to the upside, huge gains there. But something happened in 1981. Market is not doing the V shapes anymore and gets to new all-time highs right away. What it's doing is now, for the first time, it is starting to cultivate lower highs and lower lows. You can see there's a dead cross right there, and the market comes down, it gets back up. Again, that long-term moving average was in that vicinity, and then it comes right back down. In that process, we make lower lows and lower highs. The long-term moving average is the trajectories to the downside. Benefit of the doubt goes to the sellers. So with the lower highs and lowers, definitely we're in a downtrend here, but something happened in late 1982. As you can see, there is that golden cross right here. So finally, for the first time, this market makes what? Higher high. It reclaims a previously known swing high. So that's a previously known swing high. It reclaims a previously known swing high right here with the golden cross, and market yet again made another very strong bullish move during 1983. It's almost similar to what we witnessed in 1980s there. So if I put those charts together, so that's 1983 at the top and this 2023, as you can see, there's a whole lot of similarities here. Even some of these declines, even some of the declines right here, it's similar to here, right? You see that COVID decline during 2020, similar to that in 1980 decline. Look how fast it made an upside move and it's really thrived. And that's very similar to here. And going into 1983, we start zigzagging lower highs and lower lows. And same thing happened 2022 and 2023. So 1982, 1983, we see lower highs and lower lows. In 2022, 2023, we see lower highs and lower lows. What happened was, though, in 2023, we got the golden cross. It reclaimed some of those swing highs here and cultivating higher highs. And a lot of people are, comparing, or I hear that a lot online, YouTube and Twitter and things. A lot of people are comparing 2023, 2022 decline to 2008 and 2009. A lot of people are still thinking that this is just merely a bear market rally before this thing come right back down. So what I'm going to do is I'm going to go to 2009 chart, 2008 and 9 chart right here. So this is 2008 and 2009, as you can see at the bottom of your screen, 2008 and 2009. So what happened was in 2008, we see that cross yet again coming about, and then market initially comes down and it goes up. It does go up, similar to what we saw in 2023. And then we hit that long-term moving average, comes back down twice. And then what happened? Hits that long-term moving average. The long-term moving trajectory is what? To the downside. And then what happens is we're not seeing this thing kind of like sideways, building higher lows and higher highs like we've seen in 2023 or 1983. Instead, after two touches right here and here, this market totally tanks. That's a real, true recessionary type of price action. That's what happened when the bears, the real bears, the recessionary bears, when they're super angry, they don't want to wait around. They don't want your grind sideways. They don't want you to cultivate higher lows, higher highs, none of that. They're just going to bring it down and going to bring it down hard. That's a lot of times what happens in a real recession sort of type of price action. So what happened though is that that golden cross appeared, in 2009, May or so, as you can see, and this is when, again, you can see that price, there's a neckline there for the first time. What happens? It reclaimed the previously known swing high, makes higher highs and higher lows. Along with that, we can confirm that with that golden cross on the moving averages there, and then you know what happened. The rest is history, right? After 2009, we are where we're at today after more than a decade later.